Welcome once again to your financial reporting class. I want to continue with leases. We have already begun to deal with leases in our last session. I'd like to see if we can navigate through some questions so that we can appreciate what is going on. Question 76 before us says, what amount in total would be charged to hyper statement of profit or loss for the year ended 30th September 2024 in respect to the above transactions? If you don't have this copy, please, you can still ask for the same. I will send it over to you. Question 76. But I think it's a very good idea for the students to write what they're seeing, to type what they're seeing, so that you see that enhances your learning. We are told in 76. The 76th question says, during the year ended 30th September X4, H entered into two lease transactions. On 1st October X3, H made a payment of 90,000, being the first of 5 equal annual payments and a lease for an item of plant. The lease has an implicit interest rate of 10%. The present value of the total lease payments is 340,000. On 1st January X4, H made a payment of 18,000 for a 1-year lease, which is of course we treat as an exceptional item operating lease of equipment. What amount in total again would be charged in the FS, in the financial statements of the H company for that year ended 30th September X4 in respect, of course, of the above transactions? I want you to see already that we are dealing with two types of leases. There is a short-term lease and a long-term lease. I think the first paragraph there is indicative of a long-term lease. Second one is a short-term lease. What the examiner wants us to do is to find the charge, the profit or loss in respect to the two leases. So I'd like to start with a long-term lease, in which we see a finance lease, and then a finance lease will give rise to a right of use asset, which we should depreciate. And of course, we need to find what we call the interest. Remember what we did in the previous question. Okay, so lease 1. I think we need to establish the depreciation for the asset, which is the right of use asset. There's a problem there with my typing on capital. So, depreciation in this case, and I hope that you can follow what I'm doing here, will be equal to the asset minimum, lease payments is at 340,000. Of course, normally we go for the lower of the two. When I multiply 90,000 by 5, I think I'll be getting 450,000. When I compare that with our 340, the lower of the two is of course 340. So if I say 340, then I divide that by 5, I'm getting a 68. I hope that you're getting the same figure as well. Let's also deal with the finance cost for this particular transaction. So what are we dealing with? I suppose that we're dealing with a lease in advance. So what we are to do is to apply the finance, the interest charge after deducting the installment. I hope that you still remember what we did on the other side. Again, in the old days, we saw that let me write also the working here so that you can follow through. In the old days, services were hard to save. They were perishable products. But I think that in our day, there's a different issue altogether. In our day, we can always store these services because of advancement in IT. Okay, so let me just do some bit of work here. Maybe I can start with the same, brackets, less the installment, and apply 10% on that amount. I'm finding a 25. And then finally, we have got the short. So all these relates to lease 1, Then we go to lease 2, which is short term. This one was a finance lease in advance. This one is an operating lease. I want you to be careful with your debts. We have to be extremely careful with our debts. Notice that the first lease was acquired on 1st October, but the second lease is acquired on 1st January, and we are only closing on 30th September. So the first lease items are for the full year, but the second lease item will be for only about 9 months, if I'm not mistaken. Okay, so let's do the work. We said that for short-term leases, these must be amortized on a straight line basis. So for short-term leases, we recognize an expense in the statement of profit or loss. So the expense in this case will be as follows. You get your 18,000, then you multiply that by, we should be having 9 divided by 12. I hope that you can have a figure there. So 18,000, 9 over 12 is as good as 0.75. You're getting that figure there. So the total charge, therefore, if I can sum up, let me just get back to my ribbon, sum up all these amounts, sum up all the amounts there up to there. I'm getting 106,500, and that should be your answer. On the other side, you can see that option there, C. Okay, let's progress to the next question. 77 says, again, it's good to type, please. It's good to write, and if you can't write, of course, you can take a picture so that you compare what you're doing. Z entered into a 5-year lease agreement on 1st of November X2, paying $10,975 per annum, commencing on 31st October 20X3. Present value of the lease payments was $45,000, and the interest rate implicit in the lease was 7%. What is the amount to be shown within non-current liabilities? Again, we just use the principles we learned in the last video. When are we supposed to make payments? Again, looks like we're dealing with a lease in advance, if I'm not mistaken. Is that so? Okay, let's read again. 5-year lease agreement on 1st November, paying per annum. All right, so this is the lease in arrears. Per annum means after a year. So let's do some bit of work there. I want to go straight to my, this is question 77. I want to go straight to my table there, but this time around I'm going to omit the balance item. So you've got here, you've got opening balance. I think you've got the interest, okay, the interest, and then you've got the payment. I'm not going to include the balance for obvious reason. Then you've got the closing balance. Okay, so minimum number of years you have to do for a lease is at least 2 years. Remember, some figures are found in the following year. So when did we get the lease? In X2, which is ending in X3. This is not a calendar year, please remember. So 20X2, if I can just do some works there, I've got supposed to be 20X3 rather. So if I do some works there, I'm supposed to have X4 there. So we are told starting balance, minimum lease payment is that amount. Okay, maybe for the sake of order, you may want to put $sign on top there so that you have your figures there. What is the interest? So again, interest will be equal to, if I may check, 7%. So I say that figure there, not that, but by 7%, I've got that amount. Am I right? So I think I need to transfer this into the correct box. Yes, okay, I think we are right now. Okay, so after doing that, the payment supposed to be made. It's clear, the question. Equal installments of 10,975. You have got that figure. Therefore, the outcome will be these two figures. In fact, we can just sum up. There's no need for me to waste too much time. Let me just sum up all the items in that space. I've got that figure. Closing balance for last year is the opening balance, so you have got that amount. So let me just replicate the formulas. I think that you have got that figure there. You know, the 10 can still be repeated. You've got that figure there. Replicate your formula there. I think you have got that figure. Okay. So what the examiner is looking for is for the long-term obligation. I think it's clear what is the amount to be shown within non-current liabilities. So according to our teaching last year, the long-term obligation was said to be the closing balance for the following year. So that's the figure that you're looking for there, 28,802, and that's the figure that we have there. I hope that you are getting something. Let us progress to the next question, which tests IFRS 16 leases permits certain assets to be exempt from the recognition treatment for right of use assets. Which of the following assets leased to an entity would be permitted to be exempt? Okay, nice question. So again, remember low value items as well as you know, items that do not exceed 12 months. So already here we have got 24 in that option B and C, so we are above, and also there we are above. And I wanted you to remember that when they say low value items, they're not referring to the current value of the asset, they're referring to the cost. The standard is referring to the cost, all right? So I think the best option is an option where I've got 12 months, and you have got that. I think D is the best option in this case. All right, so that's what you have there. Okay, progress to the next item, 79, and somebody, I hope, is saying on the other side, isn't this spoon feeding? This is the last question that I'm doing. I hope that you're not complaining on the other side. But why should you complain? We are raising awareness in this case. Raising awareness in this case. And I'll give you a challenge. So 79 says on 1st January 20X3, Rabbit acquires a new machine with an estimated useful life of 6 years under the following agreement. Initially, they have to pay 13,760 with it, which will be payable immediately. 5 further annual installment every time you say annual at the end of the year will be due commencing when? 1st January. Is that going to be okay? No, this is advance. So they've given us a date there, unless they don't give us a date. The interest rate implicit is 8%. Present value of the lease payments, excluding the initial payment, the starting point for your computation is 86,240. What will be recorded in Rabbit's financial statements at 31st December 20X in respect of the lease obligation? All right. So again, we have to deal with the tables. I think this time around we're dealing with lease in advance. So if I can just get these amounts and replicate them a bit, I think I'll be fine. Get those amounts, replicate them a bit. Again, you're dealing with question 88, or is it 79? Yeah, 79, I suppose. 79. So again, in advance, we have to interchange certain figures. This one does not have any dollar sign. Let's do some bit of work. Opening balance, then you have got the installment, and then you've got, excuse me, you have got the interest, which you need to add. and of course you have the closing balance. So you need to take care of the dates. We're supposed to report for 20x4. When did we get the asset in 20x3? I think we need a minimum of about 3 years, because we need x5 as well. Remember, I hope you do. So let's do the work. Say 20x3, and then we drag down. I think we have got that. Starting with 86, that is the minimum lease payment. Alright, installment in this case is a minus 20,000, and then I think I need to add another 0 there, and then we are told interest. So please, interest is to be applied on the difference between so open brackets, is minus that. In fact, if we say minus, we have a problem. It's already negative. So you put that figure there, close the brackets, and then apply your rate, which in this case is going to be, if I remember well, 8%. That's a figure there that you have, and then you have your closing balance. How do we find the closing balance? Nice question. So you get, again, let's put the brackets, plus the negative figure there, and then you say minus 522 minus this figure here. Is it minus or plus? I think it's a plus. Plus, remember, interest we add all the time. So that's what you have there, 71. Okay, so all we need to do right now is to replicate some of these numbers. Okay, replicate. I think so throughout we are paying the same amount. I think let's drag down the formula. Let's also drag down the formula where here. Okay, so again, the closing balance for last year becomes the opening balance for this year. Again, you do the same here. You've got those figures. Am I finding the right options? Okay, I think I'm okay. The question is saying, give us the finance cost, the non-current liability, and current liability for X4. So target X4. Which line is this? This line here. I hope that you can see that. That's the line that we are targeting. So our finance cost in X4 is that figure that is in bold there. Okay, we can underline that one. Yes. What else do you have? The non-current liability option is let's be a little bit careful with the difference. I need to make a difference there. I will have to first of all find the current. I think the current will be the next installment, which is the 20,000. So this one I'll have to underline. Okay, let's just do this. Underline. Yeah, I hope you can see that figure there. All right, and then finally the non-current liability. Since my my formula was a bit simplistic, I'll say 55. Remember, was the total liability minus the current obligation, 20,000. I hope that you can see that. Okay, so we'll be getting, of course, 55,662 minus 20,000. I'm getting that figure there. Okay, I might underline that and just counter check. I think we have got A for our answer. All these amounts being emphasized. So thank you very much for listening in. Need I to go to another question? Yes, I can do the other questions, and yes, you can also be challenged, but of course the revision is not yet here. I think I'd rather challenge you with question 83. 83, 82 rather. Question 82 and 83, these are your assignments. I want to thank you for listening, and I hope that you can get back to me on the other side.